Good afternoon. It's Sunday afternoon, January 8th, approximately 5 o'clock in the afternoon in St. Louis in the year 2012. Seems a little strange to be realizing this is 2012, but it is. I'm Joe Terril, president of Terril and Company, private wealth managers with approximately $500 million under management. We will briefly recap the year 2011, give you our thoughts for what we expect to happen in 2012, both with the economy and investment markets, and perhaps make a prediction or two that may be a little unusual. But as always, helping me here with the video cast is my main man, Jesse Baker. And Jesse, when you're ready, let's begin our recap of the year 2011. The year 2011 will probably be most remembered for the extreme volatility that the investment markets realized all over the world. Prices were on occasion at a near panic by investors, something that we said many times was not warranted by the news. It was dominated by concerns over Europe and their abilities, and also somewhat over the continuing federal budget deficit in the United States and our inability to deal with any type of financial prudence. We were not surprised during 2011 by the fact that the economy around the world grew at a 6 to 7% rate. The economy in the United States grew at a 3% plus rate. Corporate profitability grew at 9 to 10%. These were things that we expected and indeed saw them happen. What does surprise us is the fact that when the year ended and the dust settled, even though there was incredible volatility, prices of most investments were pretty much unchanged. It was very close to a break-even type year for most investments. We had at Terril and Company pretty nice gains during 2009, 2010. Put the 2 years together and our gains were close to 40%. So a break-even type year does not bother us. We'll talk about what we expect to happen in 2012 in a moment, but a few of the other incidents in 2011 that were surprising to us, the continuing zero level of interest rates in the United States, the fact that cash inflation did run at a much higher rate than what many people expected, and the market seemed also to ignore that. So a few surprises there. Mainly, I think a way of describing it is that in 2011, investors all over the world seemed to build more risk into everything. And in building that risk into everything, it meant they were less willing to pay higher prices for anything, even those things that had improved in fundamentals. So some of the people that panicked in the summer of 2011 and into the fall of 2011 ended up suffering pretty good losses. But we feel good about ourselves that we did not see the reason for the extreme pessimism that occurred, and consequently we even purchased more investments when prices fell, and thus it was a break-even type year for us as well as the averages. But we're a little more bullish than most people heading into 2012. And Jesse, when you're ready, we will switch, and let's now move on to talking about what we expect to happen. We are optimistic going into the year 2012. We find ourselves a little more bullish than the consensus. We expect that worldwide growth will remain in the 5% plus area. We believe that the demand of 400 million people around the world trying to improve their standard of living by moving into a middle class will continue to create economic growth worldwide. We think the economy in the United States will grow in the 3% plus level again. We think unemployment will come down slightly, 8.5%. The government reported last Friday. I would think that would be closer to 7.5% by the end of 2012. We have no prediction on the election. I am always wrong trying to anticipate what politicians are going to do and what the American people believe. Like many people, I hope that we have a more pro-business approach from politicians in Washington as we head into 2013 after the election is over. We'll just have to wait and see if that happens. But many times I've made this statement, and I'll say it again right now, that politicians are basically a net negative. And the economy and business and events around the world seem to progress and go on in spite of the net drag that occurs by politicians. So we really think that the Federal Reserve Bank is intent on keeping interest rates at a 0% level. Longer term, this is going to be a mistake, but in the near future, it creates an opportunity to buy good income producing investments. We were surprised at the attitude in late 2011 that banks around the world may all go broke again and that they were lousy investments. This is not the case. We didn't think banks were going broke in late 2011, and we sure don't think they're going to go broke in 2012. And as a matter of fact, we think financial stocks will be a good investment in 2012 as people begin to realize that they're not going anywhere and they provide a useful service and they do make money providing that service. We are mildly bearish on commodities. We think that gold will maybe be down $100 or $200 an ounce. We do not look for a crash in commodity prices. We think stock market averages will return something in the 8 to 10% area, including dividends. The reason for this is we think that most of the year there's going to continue to be so much uncertainty about the election in the United States, the speed at which Europe is handling their issues. Let me stop to say Europe is handling their issues. It's a move away from socialism in Europe. That is a major long-term positive. But they cannot make that move in a matter of 2 or 3 weeks to settle the wishes of traders on Wall Street. But it will happen. It is going to take time. So therefore, while the transition's in place, while the uncertainties of the election, I think people will be reluctant to make commitments. We'll see, and certainly we update these video casts about once a month. And as the year goes on, if people become a little bit more confident in what's going to happen around the world, then I would expect a bigger rally than the mild 8% type moves that we are expecting. So with that said, we continue to hold many income producing assets, foreign dollar bond funds, energy infrastructure trust, some high yield bonds that we believe are misunderstood by the markets. and AT&T and Verizon both paying 5% plus dividend yields that I still believe are very misunderstood by most investors. So we intend during 2012 for the most part to live off the income that these assets will provide, and I do believe we'll get some mild principal gains in addition to the income. Technology stocks are undervalued. We own Coherent and Agilent, and we believe both of those companies will do well in 2012. And we would expect in general technology, some of the bigger names like Cisco and Intel to do reasonably well. So with that said, we thank you for tuning in, and we'll be back in about 30 days with an update. And Jesse, let's wrap it up. And thanks to everyone. I'm Joe Terril, president of Terril & Company in St. Louis, Missouri. Thank you.